We're good to go. Thanks for joining us. Hope everyone's doing well. Audio, video check as usual, and then we'll begin.
Looks good to me. Everything.
Yeah. You are the audio, video check, I suppose.
No, I mean I always have the YouTube video on the second monitor.
Oh,
So.
Nice.
Yep.
You can afford a second monitor after all this? That's crazy, dude.
Yep. That's what happens when you don't bull the highs.
Well,
you don't have to sell your monitors to buy the dip.
It wasn't even to buy the dip, it was to avoid liquidation.
Oh shit.
That's the thing. A lot of the narrative is like, oh, well, did you buy the dip, Anon? It's like, dude, Anon was too busy trying not to get liquidated. You know?
Yeah. I mean, everyone is talking about being all in, like every single time, like you get a dip, and then somehow everyone has money left to buy every single dip. It's weird. It's weird how it works.
It's like the Pomp thing, where every time the market's down, he's just like, I'm buying the dip. And then he'll say that he's like all in crypto, has got like most of his net worth in crypto, and he doesn't short-term trade it. It's like, where do you get this cash to just constantly be buying the dip? Do you never rebalance or do anything like that? It's crazy to me. I mean, you know me, I've got like pretty much my net worth, everything I have in crypto, but sometimes that crypto is USDC, right?
Yeah.
I don't know. I think over time I've moved away from the blanket idea that you should have this like super secret nuclear bunker cold storage stack of Bitcoin that you never touch because it's going to go to infinity. And then you kind of trade around that. I subscribed to that initially, but I don't know. I was much less, you know, my account size wasn't as meaningful to my life when I held that view. And now that the USD or fiat side of things matters, obviously more than 2017, I'm like, well, I'm not so sure I want to have this like blind commitment to just yeeting money into this nuclear cold storage bunker. Or at the very least, it's like if I'm going to count myself as a semi-competent from time to time trader, there's no reason why I can't trade around my spot exposure as well, you know?
Yeah, I mean, you don't have to be all in, that's for sure. Like, I think in general, like being all in is actually like pretty damn bad risk management. And not only that, you're kind of not making the most of it because if something bad happens, you can't take advantage of it. I mean, if something good happens, you're always going to be exposed, right? Whether you have like everything in or not. But yeah.
Cool. Yeah, one of the many things we can discuss. First things first, thanks for joining us. Like the video, subscribe to the channel, all that fun stuff. We keep it casual on Fridays, as the name suggests. I'll try not to go on more unhinged rants. I don't know, I was reading the chat last time, like people were like, oh, you're like trolling these noobs, you're being so unhelpful, etc. It's like, dude, if there's anything I can be reasonably accused of, surely unhelpful is like towards the bottom of that list. Like, I understand why, you know, people feel that way. But also, a thank you to Blockfolio, the show sponsor, mobile trading app, asset swaps, portfolio tracking, actual trading and investing where you can't get liquidated, which is awesome. And if you want to buy some bottoms or some tops like I did to give crypto to your family members, it's probably the best way to do it. So thank you to them. Blockfolio.com mobile app, go get it. You'll be better off for it. Yeah, you know, I didn't have a ton of topics prepared to discuss for today. As the title suggests, probably starting with some technical stuff makes sense. Because, you know, we're approaching the weekly close, and as we started, you know, at least where the market is right now, that close is looking increasingly like scammy. And it's not even like scammy per se, it's just the fact that resistance has kind of done its job for the time being. And now we're stuck bang in the middle of the range, which is generally not an area that I love to trade. You know, don't piddle in the middle, as some people like to say. And I think for those unaware that the structure that I'm referring to and that we've written about in Technical Roundup and, you know, that we're paying attention to is basically this multi-week consolidation before the breakout through 50k. And those boundaries, if we're using the candle closes, which I think we both ordinarily do, you basically, highest close is the resistance in this range, which we broke out from, and then lowest close is like the bottom of this range prior to the breakout, right? It's just two structures. Like, I know the duck has it as a box, other people have got it, you know, with the wicks, but I think normally it's, you know, if you want the easy way of delineating this area, it's just highest close resistance, lowest close support in the range. We broke out from the range, and the market comes back to the range. You generally expect it to act as support. Now, in terms of what's the evidence to suggest that the title isn't BS. Like, what is suggestive of that weakness? Well, it's two things. First of all, the fact that price closed back within the range in the first place is generally pretty crappy. Like, especially in a strong market, if you're going to get a rounded retest of a previous consolidation, the most bullish outcome would be price very quickly finding support at those previous highs and then reversing from that point, right? What we had on the most recent completed weekly close was, yes, the range low holding, but also price closing within the range high. So it kind of did that move where you close within a range and you go from range high to range low. It did that within one candle, right? And now what we have is further evidence. I know the weekly close is a couple days off. Like, who knows what the weekend price action will bring us. But at least for the time being, in terms of what we have available, that range high is once again acting as resistance. You can see that tall wick, which traded into the daily range high at 40k. It's all the same thing, 38, 40k. It's basically focusing on this pre-breakout structure. And now, just like we were supported at the range low, there is resistance at the range high, and currently the market's stuck around the middle of those. Is that a fair summary?
Yeah, completely agree. I mean, the fact that I'm actually surprised that we're this weak, because I was expecting to find resistance at 38k towards like the weekly close, but we found resistance there much sooner, right? We started selling off basically already like yesterday into today, which is, I don't know, I don't like it. It looks really weak. It's still like 32k is still support, so I mean that's going to be an interesting area. I don't know if I'm going to buy it again or not.
I was going to ask you that, whether you're going to rebuy 32, because I bought it once. I know you've bought it like twice.
3 times, basically.
3 times. Like, I bought it on the first initial liquidation drop, and that felt super comfortable. The second time round, I probably should have been buying it, or the equivalent structure in ETH, and I didn't. If the market wants to reach back there the third time, I don't know if I'm a flat buyer of the level. Maybe I want to see some more spice, like a run below previous week's low, whatever. But, at least you've got very clear boundaries to trade with, right? That's sort of why this range makes so much sense, whereas weekly close above 38k, we just basically likely come back to test the breakdown levels, and then if weekly 32k fails, then probably 2017 levels. But for the most part, it's like resistance generally seems to be doing its job, and if you tried to trade against that, you're in trouble. And again, at least from the available evidence, support is doing its job, and selling into it is still a pretty shitty trade. So this is where the midwit traders make money, myself included, where you kind of just buy support, sell resistance, and you don't have the mental capacity to like think beyond that. This is one of those conditions where taking it one level at a time, even if they aren't so far away, actually makes a lot of sense.
I think honestly, like if I had to take a trade, I would definitely be buying 32k again, and then trying to sell 38k. I mean, I don't have to. That's why I'm like, okay, do I even want to? Because the problem with buying 32k is that you're either going to be right and it's going to bounce a little bit, or you're going to be wrong and you're going to get completely rug pulled, right? Like there's no in between there. You buy this thing and you're either like down like 30% immediately, or you're going to be up in the next few hours by like 15 to 20. I mean, it's going to work out most of the time. That's why that's an okay trade to take.
Yeah.
I think like really, like if you're thinking about probabilities, I mean, there's a very, very slim chance in my mind that we're just going to break 32k. It's just like, if we do break it, it's such a bad event that it's pretty tough to kind of be exposed. So, yeah.
I agree. Like, the more, with every consecutive touch, that sort of asymmetry gets a bit more uncomfortable, right? Like, if you do buy it, like the one time, let's say, where it doesn't, in a world where it doesn't hold, if you're trying to buy 32 and sell 38, for example, and let's say you choose to get involved when you buy 32 and it doesn't hold, the downside which you expose yourself more to is likely much larger than even if you get to trade it from the range low to the range high, right? Which is where at least for me, where the first test, best test meme comes from, especially in the context of a liquidation fueled rally. Like, that's the best trade you're going to get at the level, and then with every consecutive touch, if the market goes back there, you kind of have to force to confront yourself with the fact that, yeah, the trade is still valid, but generally speaking, the probability of success may be decreasing, or at the very least, if you have a ton of buyers at that level, and the one time, if it rug pulls, I mean, 6k is a really good example of that, right? You have kind of a consensus floor for the market, which is 6K, and it seems to be giving endless brain-free trades. But God forbid you get that trade wrong, like the 6K breakdown, you're not getting out of break even, right? And if anything, you might give back many of the trades that you took at the level in the first place. So that's the sort of tough asymmetry to deal with there. To be completely honest, I haven't been compelled to even trade this range that we have right now. Price has just been super slow and draggy. Like the swing traders that I follow and speak with, you know, we're in a similar boat where it's like, yeah, 32 support, 38.40 resistance, and that's all she wrote for the time being. And then the scalpers and short time frame traders I've been following, and also through my own observation, they're like, man, this price action sucks. Like, price reaches these key levels and the tape is dead. There's no volatility. Like, it's just a bit of a nightmare to get involved in. So I haven't felt hugely compelled to position for the time being, nor would my system kind of allow for it, at least at these levels. I'm very much in the same boat where I'm allowed to buy 32, or if I'm a buyer, you know, through resistance, the weekly close has to kind of accommodate it as well. But for now, it's kind of neither or, you know. And again, if I measure that weekly structure we're in and kind of, you know, drag out the fibs, you can see that the mid-range lands at today's low, I think, or around today's low. So that's probably not a complete coincidence. But generally speaking, that's, you know, I try to not trade the range midpoint. For now, range low did its job here, range high did its job here, and now this is probably one of the least attractive areas to get positioned.
Yeah, I mean, I would definitely not want to be shorting it because we're in weekly support, at least for my system. So it's like, if anything, like in this area, even though like I'm expecting it to probably break down at some point, I just wouldn't want to be shorting it just based on the fact that we're in high time frame support. And I mean, I've talked about this level so many times. I'd be an idiot if I just shorted it the moment we got into
it. Just losing perspective and everything.
Yeah. But like in general, I mean, the weekly does look rough. And I mean, I could see the weekly close red this week. And then what? But my most favorite kind of close would be like at 38K, because then it'd be pretty obvious what to do next week, which would be looking for shorts. I mean, I wouldn't take any shorts, like I said, but I mean, anyone that's trading it on the lower time frames, I mean, that's going to be an interesting one. Anything but that, like other than just closing straight at 32K, which I think would lead probably to another downside wick that gets bought up. Anything besides those two, I'm just not interested in, other than just like trying to get like the 32, 38 range trade.
Yeah. And that's, I think, where a lot of difficulty comes from. Like, especially given we had such a volatile preceding move, and the market is like at a sort of do or die inflection point. It's really tempting to just position into it or get these, you know, high conviction trades, whatever. But for the most part, this is where the difficulty comes in. Like, you want to trade the type of volatility that led us into this level, but if anything, it's like the worst place to trade like you would a trend, right? Or like a trending move, because you're in a reasonably tight weekly structure. All the levels are doing their job, and it's just not the spot, I think, to go for the ride or die trade. We just hold to infinity in either direction. At least that's not it for me. It's kind of a range until proven otherwise. The range boundaries break. You know what to aim for. While they're intact, you just trade from one level to the next and try not to entertain the idea of 30K whatever breaking, because that would suck. That just would be quite, you know, I think like people overuse the idea of do or die levels or whatever, but really that bottom of the range there makes sense. Even if you look at pretty much any time frame, weekly especially, daily makes it somewhat obvious as well. Because the market traveled so quickly through its all-time high, this is really the only area where any type of support or structure was built. It's kind of the only place we paused before moving through it. So, you know, if you don't get support there, then we're forced to confront 2017 levels starting with 20K. So, yeah, generally speaking, you know, 32 still support, 38.40 still resistance, and that's kind of the scope of my trading until proven otherwise. Which makes, of course, 32 a decent bet, right? Because like it either holds and, you know, the market exists, but if it doesn't hold, you likely just take a long holiday because there's probably something uglier afoot. What do you think?
Yeah, I think in general, this is the time where trading gets difficult, right? Most people are just not at least if you've been around for only a year. I mean, if you recently joined, you see the up-only market, everyone makes money, everyone buys stuff, and it just keeps on going up, right? You kind of learn a weird trading style. And I know because, I mean, we've gone through this as well back in 17, where it's like you kind of have to adapt to up-only in a way where you trade like a complete moron, and that's the way to make most money. And I think this kind of, whatever we're going to do here, right, whether it's going to be bullish or bearish, I think everyone that trades low IQ kind of trading styles is going to lose big time. And I mean, I've been vocal about that on Twitter before, where it's like, if you're not used to this kind of stuff, if you're not used to ranging, to kind of choppy conditions, it's probably wisest to just chill, kind of sit on the gains that you've made, or whatever, like if you've done well with altcoins, just chill, take some time off, and then come back when the market conditions change again. Because this looks, to me at least, like prime opportunity to basically run over everyone that doesn't know what they're doing. And I mean, that doesn't mean like, oh, you're just a shit trader if you've come in the last year. It's just you're not used to this. And the people that have been in the market for a longer time are, because I mean, it's just how it's been trading basically the entirety of 2017 to like basically 2019. Like that's the exact price action that we're having right now. Doesn't mean it has to be topped. It's not a guarantee. It just means that this is basically made to fuck you over. And if you don't want to be fucked over, you either like change your trading style to accommodate for this, or you just sit out. And sitting out is probably the best choice.
You've had fun though, anyway. Poking fun at the fact that the conditions aren't as good as they used to be with your crab. And but yeah, I agree. This way you just give a lot of it back. And I personally haven't seen any triggers for like high conviction positions. Arush says, "Cred, not gonna buy 32k in the middle of the bull market. What the fuck? I literally bought under 32k and played the bounce on both Bitcoin and ETH at like 1850s. Like, I've taken the trade, and I took it when it made the most sense for me to take it, which was when the context wasn't just a technical retest of those high time frame levels, but also like a liquidation-driven retest of those high time frame levels. Like, I'm not an idiot. Like, I understand the asymmetry that those structures present. I've taken the trade, and now I'm chilling and waiting to see how the rest of the market unfolds, whether I want to take it again, etc., etc.
Yeah, I think in general, like, the fact that you've already taken that trade, it's so nice when you like take the trade when it's scary, right? I mean, for us, it felt like that dip to buy, like that 37k to 33k dip, basically, that went then all the way to 28. That was relatively easy to buy, at least for me. It felt relatively chill.
I felt pretty comfortable as well, but I think it depends how you go into it, right? We both pretty much went into it having been in USD or tethered, whatever, and expecting some sort of corrective move. Maybe not to that extent, but, you know, it comes from, like, we're approaching it from a position of strength where, you know, you're expecting downside, you're positioned for it, you've got cash to deploy, you're not, like, buying shallow dips on the way down and trying to manage your margin, etc. You know, it's a very much a good place to approach it from. I'm sure if someone was buying the dip at, like, 45, 40, 38, 35, by the time it gets to 30, it probably doesn't feel like an easy buy doing so at whatever.
That is true.
You know? So I think the context, like how you're positioned when the market approaches these levels, affects your conviction a lot and your execution a lot.
That's true. If you're suffering through like the downswing, it's not going to be as easy. But like in general, I think if you've bought the first time, right? And I mean, what I've done basically is just I bought it and then I bought it a little bit higher again and then bought it again a little bit higher. And that felt relatively easy because I was sitting on the winnings of the first trade, right? So it's like I made a bunch of money off of this level already, and I could see this second test hold and I could see this third test hold, right? And the more often times you do it, the more risky it gets, right? It's just a question of, okay, how often do you want to play that game? At some point, you're going to get cut, right? It's just, if you can play it 6, 7, 8, 9, 10 times, that's going to pay way more than the cut would do, right? It's just, what I see people do is they're too scared to buy the first time and then too scared to buy the second time. And then they're like, okay, this held two times. Now I can. And then it gets really, really dangerous, right? Yeah. Because, I mean, you don't want to be buying that level where like bulls have been kind of sweating Because I mean, if we lose 32K, like almost everyone, I think in the market knows that we're going to kind of have another liquidation event going down, right? And it's like, it's not getting safer to buy this. And this is what I think Cred basically said, and why he doesn't want to, like, or at least thinks about not buying it again. Because I mean, it's getting scary, right? I mean, legitimately, this next test, no matter how slow it's going to be, no matter how we get to like 32K, that's going to be terrifying to buy. And I'm not even sure if I'm going to, because
just the fact that we're both shitting ourselves probably means we should buy it.
Yeah. But like,
if it gets there, I mean, who knows? Maybe
right?
we just V-reverse from here. But yeah, if this range remains intact, definitely. And you get this a lot in terms of price action. Those worried about the, well, not worried, but interested in kind of the lower time frame aspects. You get this a lot, or at least my trading system gets this a lot. And I think I stole it from Duck in like Vegas a few years ago. But a lot of the time, you'll have like a wick or price spending very little time trading at a high time frame level, and then you get like your crazy reaction, and that's the short-term trade. And then a lot of the time it'll come back to that same level and actually print some candle bodies there. So a lot of the time this is like your first test in brackets, but like your first, I like to call it like a meaty test. We actually get price spending time there, some candle closes at or around structure. A lot of the time that's also a very good trade. So that's kind of the first and second touch sort of thing. For the short-term trade, and the kind of instantly you know whether you're right or wrong, it's kind of the good old first test, best test, you know, orders get filled at the level and it's like an instant reaction. That's heaven. But a lot of the time, the second test is actually really nice when it's not just wick and very little time spent at the level, but it's actually something a bit more substantive. That's at least where my system tends to do well. Like first test, best test, I'll take. Meaty candlestick test, I'll take as well. After that, it gets a bit unclear. If I know I can be first at a level, I'll almost always trade it. And then if I know I can be kind of one of the last at a level, I'll pay attention as well. And normally, like, if I think that this is still really good support, it's just, you know, the first time buyers haven't seen much and they're willing to capitulate. Like, sometimes I'll get involved there as well. But in terms of bread and butter, yeah, this is, you know, this is my shindig. What do you think?
Yeah, I mean, that's one of the ones that I usually try not to share because it works.
Yeah,
it works so well, but
it's okay.
We'll
delete the VODs.
Yeah, but no, it's fine. I completely agree.
I have a similar setup actually, like which relies on similar logic. Where, for example, I'll have a level, and price will. I've got like a full video on this. It'll kind of double close the level, right? So it'll come into it. It'll close below, and then the next candle closes above, and then the level shoots off. And usually the retest after that type of structure is like a brain dead limit order. So like the same logic exists on different patterns. Like if you have a high time frame structure, and initially on the first test, price spends very little time there, there's normally some sort of validity in trading the actual return to the level, as opposed to just a short term price action that was based on the initial reaction. So what this would look like at support, for example, and this is one of the setups I trade consistently. I mean, might as well, you know, if I'm going to ruin your setups, might as well ruin my own as well. So you have like a high time frame structure. You get an intraday close below it, and then the next candle basically closes above it, engulfs, whatever. Like this type, what looks like messy price action actually ends up being quite clean all the time. And ideally, you get this close below, which looks bearish, next close above, which nullifies that to some extent, and ideally the market pushes away to some extent, and then when it comes back, either rounded or even in a short-term way, I mean, if there's time and space between this and price coming back to the level, that's cool. If not, it's still actionable, but especially the rounded ones are good, where you get this attempted break and immediate rejection at a level, market pushes away, and then when it comes back to print some candle bodies, that's like a brain-dead setup that I take whenever I see it, usually on like hourly, 4 hour, whatever, based on daily structure or higher time frame. But that's the thing, no matter which interpretation you take up, like whether you want the first test, best test, or this kind of later retest, both of those have kind of happened at 32k, right? We've had the first, you know, the initial reaction has played out. We've had the price spending a bit more time there to some extent. I could still see, like, you know, a few scary looking closes at 32 if it wants to get there, but I think that, you know, the easiest trades out of that repertoire have probably played out. And as you mentioned, each time you make that same commitment, like if you're wrong, there's a really good chance you can just give back what you made from those previous so-called lower risk trades, you know?
Yeah. So you gotta know when to kind of pull out, and
yeah. Turning this into life advice already.
Yeah, I mean that's just how it is. But yeah, in general, I think that's well said. The entire thing. Someone said in the chat that the best bullish setups are failed bearish ones, and I tend to agree.
Yeah, I say that every stream.
Oh, that's why.
they're just quoting me at me. I'm not the first one to say it, obviously. It's just something I repeat on the good old Monday sessions.
Yeah.
Do you have a view on ETH, by the way, right now?
I haven't actually looked at it in a long time.
See, that's your that's to your own downfall. I took a similar trade on ETH, like the do or die structure. For me, was this highest close at 1935, and I had limit orders at 1850 based on. I actually don't remember where the 1850 level came from. It might have been this weekly close here. Nope. Oh, was it this? Yeah, must have been. The slightly lower high close. Anyway, same type of structure. You have a long range, market breaks out and then comes back to retest it pretty much immediately. You know, if you're going to bet on a bounce anywhere, it makes sense to do it there, especially given the size of the move that you're dealing with. And also, interestingly enough, Bitcoin, at least on the weekly, has this overhead resistance that it closed back within on the weekly. For ETH, it's not entirely clear whether there's a similar range high or overhead structure. At least on the weekly, and the daily again isn't as structurally straightforward, at least to me. The range that I've been monitoring on the daily, like, this is just a bit messy, and I decided to pay attention to this cluster here. Like, initially I was paying attention to this breakout level. It could still be valid, but I kind of updated my view to this more recent price action, where it's kind of the lowest close of the cluster here, highest close of the cluster here, and that's your range. And what we had was an attempted breakout through the range high, which failed, and now the market reached support at the same time. So that's kind of my interpretation on ETH for the time being. Another setup that I've talked about a lot is when you get bearish fake outs, which then get reclaimed, right? So you've got resistance, market comes into it, resistance breaks above, oh, it's back below, that's a fake out, that's ugly, but then actually reclaims the original level where the fake out took place. And just because double fake outs at good levels are generally unlikely or don't hold as often, if the market reclaims the resistance at which a fake out has already taken place, that tends to be a good continuation signal. So if the market wants to give me that, I'll take it towards what seems to be a pretty obvious trouble area at 3400s. But for the time being, in terms of the available evidence, we have Bitcoin turning away from weekly and daily resistance at 3840. ETH attempted breakout through 2800, not successful, made its way back to support. So yeah, that's kind of what I've got. And again, if we enter the Doomsday Armageddon scenario, whatever, I think it's fair if there's an expectation that another breakdown in Bitcoin would take it to its 2017 all-time high. We can, I think, come to, at least for a starting position, something similar to Ethereum, which for me is the 1400 level, and below that are just numbers that I don't really want to entertain for the time being. So we'll pretend they don't exist. Also, like, already some concerns in the chat, like, oh, why are you so bearish, etc. It's like, that's not the point. We started off by being explicitly clear that price is in a range, and you can only look for downside targets if the range breaks, or if the range low breaks, and upside targets if the range high breaks. But it certainly doesn't hurt to be aware of where the acceptance targets beyond the range exist. Just useful to have as a kind of roadmap, so you're not blind if conditions change. What do you think? What do you think of ETH? Do you have I think you've got a similar structure at, like, what is it, 1900, 1800? But do you have anything below that? You can screen share as well.
Yep. Give me a second. So this is my ETH chart, basically the exact same thing. Right. I don't want to touch this at all. Like, it's just...
How did I end up as the bull ETH in this technical roundup deal? I've been trying to I don't know. It's a very strange development where even on the way up, I was finding these admittedly pretty shitty levels. And
yeah, you said, like, this is like the best long setup ever.
Yeah, and it was.
And it turned out to be, but holy shit, it's a bad one. No, but for me, this is really difficult to trade. It looks like a bubble pop to me, just based on this. I mean, look at this and tell me otherwise. Like, legitimately, just look at this and tell me otherwise. Like, technically, this is still at support, right? And this could go up, this could go down. I'm just not going to touch it unless it giga nukes to like 1.4K, which I would buy. and then see how strong the bounce is, right?
Right.
Otherwise, like I don't want to say, okay, the ETH tops in or whatever. It looks like a bubble pop to me. It looks pretty much the exact same way this did. And I don't want to get in. I don't have a technical reason to like think that the top's in, so I don't want to short it. Wouldn't anyway. But like for me, this gets interesting at 1.4K because then I think people are getting legitimately wrecked. Like that's gonna be liquidations over liquidations, so that's gonna be interesting for me again.
Can you imagine
for a trade.
what the gas fees would be like?
Yeah, I mean that. Like I don't want to imagine how DeFi and everything would look, right? I mean it's just completely devastation. It doesn't have to happen, right? I'm not saying ETH is going to 1.4K. I'm just saying if it does go there, I'm gonna be interested in it. And until that happens, like fucking hell, this looks like garbage.
Right.
It's ETH still, right? And ETH's been outperforming. And ETH BTC doesn't even look that bad. Like
Yeah,
that's a terrifying
thing.
Like ETH BTC, looking at this, like I'm not even bearish ETH BTC. Yeah. Like I think this could easily go higher. So like looking at ETH USD like this, when ETH BTC is bullish, I'm like, okay, holy shit. That's just all because Bitcoin looks like garbage. And like this is a good kind of picture to look at if you're bullish Bitcoin, because like holy shit, Bitcoin kind of did this to ETH, right? Because the ETH BTC chart still looks fine. And that has me a little bit worried. I mean, at the end of the day, right, only trade whatever you kind of, where you have a setup, and I'm not going to have a setup there. Like I knew like 2K was good support. I tweeted as much while I was buying Bitcoin. But like anything
the
beyond
Donald
this,
sleight
like,
of hand, you say you point out ETH support and just buy Bitcoin instead. Also, that kind of answers the question. So it's okay to short fam. Why the shyness? Sponsor doesn't like it. I mean, that's hilarious. I think that the reason is that 1900 is still support, so you're kind of shorting into support.
Yeah.
On a higher time frame basis, at least. And no, it's nothing to like our sponsor of this show and the newsletter miraculously doesn't form our opinions on the market, believe it or not. So
yeah, I mean, it's just for me, this is very tough, and it's tough on both sides, right? It's tough to call the top on this thing because I mean, ETH's just been rallying so hard, but it's also tough to call the bottom because this legitimately just went down in 2 weeks, 60%. And then, like, if you think about, like, if you think back...
Oh, sorry, by the way, sorry, just breaking news while we're here. BitConnect has been charged by the SEC for $2 billion as a result of a global crypto lending securities offering. So...
Oh, shit.
So there is justice in the world. It just comes with a 4-year waiting period.
I mean, is that gonna be bullish? Like, that's the thing, right? You hear this, and I'm happy to hear it because fuck those guys.
Oh, and the promoters
right?
have been charged as well. Trayvon Brown, famously, Craig Grant, Ryan Mason, and Michael.
Oh, this is so sweet, dude. The one thing that I would love the most, even though it would kind of wreck the ecosystem for a while, is if all these like shilsters, like professional shilster that don't do anything, they don't add anything to anything, they just chill their bags. Like if they get wrecked on a large scale, that would make my year. That would make my decade, probably. Like, it's been my one like eyesore with crypto that whenever crypto goes up, like these scammers get so big, and they make so much money. It's just like it's disgusting because
What's up? Yeah.
I know that like all these like they're making a bunch of money, right? And you know that like the people that they shill to lose 10 times as much.
Right.
And it's like, ugh.
So SEC chart I've got on the screen now. US promoters of 2 billion. Yeah, I misread that. They're obviously charging the promoters of what was the whatever amount locked up in BitConnect of 2 billion. We allege that these defendants unlawfully sold unregistered digital asset securities by actively promoting the BitConnect lending program to retail investors. We will seek to hold accountable those who illegally profit by capitalizing on the public's interest in digital assets. So that's a thing.
I mean, that's going to be, like, I think people are going to panic selling into this.
Oh, yeah, I misread the name. I think I said Trayvon Brown instead of Trayvon James. I mixed up. But he's the famous one. So you didn't lose all your money, well, you technically lost all your money. So yeah, you know, there's a bit of a delay when it comes to the... But I mean, the SEC was charging BitConnect with stuff and like forcing them to shut down like, you know, a couple of years ago. Was that last year? I don't remember. Time is weird. But basically, they've had the regulators' attention for some time. This just seems to be the next step of like, now they've identified the actual individuals and all of that type of stuff.
Yeah. I mean, That's good news overall, I think. But for a lot of people, that's going to be bad
The market's
news,
down on news that BitConnect is so integral to to the crypto market valuation.
No, I think
The fundamentals have changed.
I mean, I know you're joking, but like the people, someone asked in the chat, like, why is the market going down on this, right? Like, why have we like this 5-minute red candle? Whenever you have like anything in the way of regulations or whatever, people in crypto start freaking out. It's just how it is. Like you hear any regulation talk or any kind of anyone has to kind of stand for their action in the court of law. You're gonna have people panicking.
It's a market that's allergic to accountability, basically.
I like that. I like that a lot. But yeah, I think that's why.
Yeah, so that's fairly straightforward. I made a tweet a couple days ago, or whatever, saying that I wasn't terribly interested in altcoins in terms of where they are now. And the market hasn't, like, whatever, it's kind of in the same place. But my reasoning was essentially, and I've got all the bullish examples here, but like my reasoning was essentially, in case it wasn't clear in the tweet, was that this is what a lot of them look like, right? Whereby you had these enormous market structure type of wipeout candles, and then you have massive recoveries, right? And even if you go from, like, you know, these are like 40, 50, and on others like 100% bounces, those bounces aren't are probably the worst place to position, right? Like, even if you're bullish, the way you'd want to position after such a big market structure wipeout is either much lower to get your good-looking entries, or when those market structure breakdown levels get reclaimed. I mean, the third option, which is too late, is actually catching basically the bottom of the move, or near the bottom of the move, and trading the mean reversion in the bullish direction. But there comes a point where after a wipeout and a retest, you just end up pretty much buying resistance, which is what I think a lot of altcoins looked like in the past.
Turn off log chart for a second.
Yeah, can we not?
Just do it.
This is a log free live stream.
Like, it's so tough to argue anything when you have charts look like that, right? Like, anything on the bullish side. And I mean, this could be the greatest trap of all time, but then, like, you don't have to short it, right? You can just wait for it to reclaim to start going bullish again. And that's like the one thing I think people kind of start to forget during like longer bull markets is, I mean, you just have to dodge these like 90% drawdowns on the altcoins by being a little bit careful in situations exactly like this. And you're going to do really well in the altcoin space. It's just people get trapped into believing like, okay, this goes up, up, up only, and I'm going to have to buy every dip. And then it starts dipping and dips lower and doesn't stop dipping. And then you're stuck in this thing and you never sell. And then you're a back holder for 3 years and you suffer every single day. And it's just not worth it. Like, the risk that you take by saying, okay, I'm never going to sell this is so astronomical in the altcoins that it's like, I'm more than happy to kind of see these break down and then I'm out. Like, whenever it just makes no sense to me to just say, okay, I'm going to be a forever holder, unless you're an investor, because I mean, if you are really good at picking this kind of stuff, like picking stuff that's going to stick around, I mean, do so. It's just, for me,
in many cases, like, they come so close to reclaiming these levels, it's literally a difference of like, you know, 10-20%. It's like, just wait 10-20%, but the asymmetry for waiting that little bit becomes so obviously skewed in your favor that you're at least targeting all-time high and beyond, right? There's like, there's no reason to just, I think a lot of it is emotional, where if you got wrecked on the move down and you're just like bleeding out your ass, and then you look at your watch list or the market, like I can look at mine, right? Like, overview here. And then you look at this and it's like all green, like 30, 40, 50%. Like, part of you almost, you know, has to buy it, or really feels like buying it, because you're basically seeing an opportunity to make back what you lost, and you feel like if you aren't positioned for it, you're essentially squandering, right? Like, squandering the chance to make back what you've lost. Everything seems to be rallying, etc., etc., but, you know, a lot of the time that just ends up being a shitty trade. So, I mean, until proven otherwise, that remains my, like, there are exceptions and outliers, obviously, but that remains my prevailing view on altcoins. We had a big weekly move down that crushed weekly market structure. And now this bounce has taken a lot of these altcoins into prior levels of market structure, which are now resistance. So accordingly, I have no ego about buying above resistance if I think it's going to moon, especially because in that case, it would probably mean we go to all-time high and beyond. So you're not like sacrificing much in terms of risk reward, or, you know, market trades lower, in which case, fine, you get your favorite shitcoins at a discount. But, you know, if someone asked me, you know, if we go back into replay mode and said, okay, well, this is the weekly close, for example, it's like, where do you think is the worst long entry? It would pretty much just be a retest of where the market is now in many cases. Like, you're literally buying high time frame resistance after the biggest, or one of the most obvious or compelling bearish market structure wipeouts we've had in a while. It's just not a good trade. You know, I don't emotionally care about tops, bottoms, percentage moves, whatever. It's just a shitty process. It's not a good trade. There are way better ones that that will reward patience and not chasing the first bounce after a big move, you know?
Yeah. Something that I want to say, because someone said it in the chat, what about long-term investments, right?
Go on.
So,
also,
I mean,
go back like 20 seconds. Go off. I've got your screen share.
Yeah, good. If you look back on like good coins too, right? This is ETH, for example. We set up an all-time high, right? And let's say you made an all-time, like you made a long-term investment basically at that all-time high because you heard about ETH, right? If you're not prepared to sit through a 90% drawdown against Bitcoin, and Bitcoin went down for a large part of this, I mean, then you shouldn't be investing in this kind of stuff long term, right? It's just how it is. Like, this stuff can go down 90, 95%. And we've had the same with DeFi, right? DeFi isn't a new thing. Like, there were a lot of DeFi stuff that were around during the bear market, and they still went down like 70, 80, 90, 95, 99% in some cases. It's like, either you have like a huge time horizon and a huge risk appetite, and you're fine with taking like 90% drawdowns, or you have to act in situations where the market looks bearish. Because otherwise, you're going to sit through this and you're like, I'm fine with taking a 70% haircut on this, and it goes down 80, and then you sell, and it might go down like a little bit more to like 85, and then it starts rallying again and you're fucked. Right. And that's like the biggest kind of issue most people have is like, even if you're buying solid stuff in here, if the market turns bearish, you're not going to be safe. No one is going to be safe.
And the nuke is the best evidence of that, right?
Yeah.
It's like correlations pretty much went straight back to 1 when the market nuked, because, you know, collateral is collateral. It doesn't matter what you have to sell to get it. Now, I think it's one of those weird things that you have to get used to, that the whole decoupling, flippening, loosening correlations, those are all considerations, at least from what we know right now, for when the market is bullish. But if the market looks weak, or there's like a liquidation driven sell-off, or just a really big move to the downside, you know, we go back to the drawing board, and the old rules apply. So I think the way you get trapped is by, for example, trading a lot of those altcoins and sectors and rotations on the bullish side on the way up, and actually, you know, positioning correctly when it comes to trading outliers, and, you know, you benefit from the correlations being weaker than they normally are. And then the issue comes with assuming that that is going to apply to the downside as well. Okay, well, this was stronger on the way up, so if the market dumps, it's going to be less bearish on the way down. And, you know, I think there was a real stress test in the market for that theory in the last couple of weeks, and it just hasn't quite stood up to scrutiny, you know?
Yeah. And I mean, I don't want to like stress people out by saying this, right? It's like, it's not like I'm saying, okay, you're going to take a 90% haircut on your altcoins, because that's not what I'm saying. I'm just saying, like, all these like investors that are like, I'm going to hold this through thick and thin. I mean, there's probably going to be a time where you're down 90% at some point, or like at least from your all-time high, right? This can go down, like these altcoins can go up 100x and then go down like 90%. You might still be up, but I mean, it's not going to feel pretty, right? And that's just how, like, I've seen people hold through these things, and every time I see it, I'm impressed, because I couldn't do it. Like, I would be completely losing my mind over those years, and I've seen it times and times again where people have done it. So it depends on kind of like what you're in the market for, and how you can kind of cope with this stuff. Because if you can cope, and a 90% drawdown on ETH, and you're fine with that, I mean, do whatever you want to, right? If you think this is like a good investment, then fucking invest in it. It's just for the people that can't do that, that's where you need to actually start doing stuff when something turns sour. And I think we kind of had that happen last week. And
even as an investor, right? Like, you still don't have infinite cash. So even if you can hold through whatever shitty cycle that drags everything lower, if the market gets to that point, it's not like you're disadvantaged by being able to rebalance when it matters. Because that's the end of the day, you can still express your conviction better if you have a better average or more money to buy when prices lower, etc., etc. Like, a lot of the times, investors just kind of throw their hands into the air. Or, like, you know, just like we have fake traders who claim to be trading short term, but actually just invest in stuff. The much more common is like the fake investors, right? Where they say that they're long-term, multi-year horizon, but then look at charts more than we do. Like, even if you're like a normal investor with a multi-year time frame, it still doesn't hurt you to have cash to buy if the market goes to shit, right? There's no like special prize for being able to hold through massive. There's no like bonus prize to be if you're able to hold through massive downtrends, whatever. And if anything, if you can actually improve your average and buy when the market looks like shit, the chances that you're able to hold and have the mental capital and the conviction not to sell too early when the market's actually recovering, all of that is super helpful if you kind of work your way around your entries and exits to some extent, at least in my opinion.
Yeah, but I mean, that's tough. I mean, no one wants to say it, in my opinion, because I mean, there's no real good outcome to saying it for you personally. Because I mean, if you're wrong, right? If you're on social media or on YouTube or wherever, if you're wrong by saying, okay, you should be careful here, then people are going to say, yeah, I mean, he didn't buy the bottom or he made you not buy the bottom, right? And then if you're right, everyone's going to be wrecked anyway, and people are going to leave, and no one's going to remember it. So that's why you have like these echo chambers in crypto, where it's really, really hard to say anything of that regard, with regards to like risk management, and sometimes just chilling out and waiting for like everything to look good again. But yeah, it's the one thing that I find really, really hard. And I mean, I've been around and I've done this over the years a couple of times where I've said, I think now it looks scary. And even though I've done that, it's still hard for me to kind of put it out there, because I mean, I know how much shit you get if you're wrong. And for bad reasons, right? I mean, because like, it's basically what you're taking. Like, if you're careful at resistance, it's basically you're taking a trade, right? You for example, with what did you show earlier? Uni?
Yeah, Uni, as one of them, Aave as well.
Yeah, so what you're doing, if you're like staying safe in this kind of area, right, is you're taking a short hedge. You're not even taking that trade, you're just taking risk off. But like, if you have to imagine it the other way around, it's basically saying, okay, if this goes anywhere, if this starts closing back above in here, I'm going to be back in it, right? And then you just leave this on the table, this difference, and then just mega chart it back up. And then if it happens again, you do it again. And at some point, this is going to draw down like 50, 60, 70, 90% probably. Like, I could see a world where Uni goes down 90% during a bear cycle, and then you're not in that for that portion of time. Like, that's the way I like to be in these altcoins. Doesn't have to mean that you have to, because I mean, some people just don't want to miss any second of any rally, and that's fine by me. It's just like how I look at these things. Like, I don't want to be stuck in this for the next 2 years if I have to. I just much rather like chill out and see how it goes. Yeah. Even more so because I'm not married to any of this, right? Like, I couldn't
Especially
give
not
less.
DeFi, hey, Don?
Yeah, I mean, no, but I couldn't give less craps if Uni is gonna stick around or not, or if Sushi, or like for that matter, like Litecoin or ADA. Like, I don't care. I'm just like, I'm trading those things to make money, and if you're the same way, you're gonna have to approach it the same way. But if you're in this to kind of make the most of these altcoins, right? You want to have the most Uni, for example, for the long term. It's a completely different mindset to have.
Yeah, for sure. And also, like, one thing we talked about is like selling on the way up versus like selling on the way down. And I think we generally both lean towards selling on the way up, and then you can have an invalidation and get back into the market. That isn't always a popular perspective to have. But hopefully, with like how this move has played out in the majors, especially in altcoins, you can kind of see why you generally, at least if you can, want to take profit on the way up, because a lot of the time the idea of taking profit on the way down is just an illusion, right? Like by the time you blink, it's down 40, 60, whatever, 70%, and then you start playing mind games with yourself again that, okay, well, it's so close to support now, or it's gone down so much now that it's gonna bounce, and then I'll take profit. Like, it doesn't make any sense for me to sell here. And you've given back so much in UPNL or whatever, the amount of discipline that you need to sell something after it's down that much, it just makes life pretty difficult. Like I saw Carbon had a pretty good way of doing it. He just established a point in the market cycle where he says, I'm just going to start paying myself every single week. And so he ends up getting some really shit sells, some really good sells, and some distinctly average ones. But at the end of the day, he's still getting paid and not eating the full brunt of the haircut. So there are systems that you can employ, but the best ones, they don't need to be like rocket science. But as long as you pay yourself something to avoid this type of wipeout risk, that's awesome. And it's no secret that people gave back literally months of bull market within the space of like 2 days, and that's just a pretty shitty position to be in.
Yeah, I agree. I mean, the funny thing is, like, everyone that's been around, and I mean that might be like a bad thing if we've truly head into the super cycle, right? But everyone that's been around for a while has kind of that mindset that at some point you gotta take some off, because we've all seen the space bubble so many times, and bubbles deflating, it's brutal being in that, right? So everyone, I think, that's been around for like 17, 16, maybe even like in the 14, 15 era, right? Everyone is taking profit out of the market. It's just like everyone that's new in the space is just kind of like martingale, at least from what I can see. And I mean, that might be the better position to be in if you're expecting the super cycle. But for me, nothing really has changed about this market. I'm just going to try to take at some point, and I really like the idea that you put forward, or like that Carbon made, by just paying yourself. Because I mean, at the end of the day, like most of us traders anyway are trying to maximize the money that they get out of the market, and then you can deploy later for cheaper again if you're right. And if you're wrong, I mean, tough luck, you still make money. At least that's my view on and how I approach it, right? I'm not going to lose sleep over like having a little bit less of a coin. I'm going to lose sleep over like sitting in a coin that is down 90%. That's just going to, I mean, that's just not how I want to, like, I'm not willing to take that risk. Like, it's just way too much for me.
Yeah.
But,
yeah, I agree. God knows. With a lot of these altcoins, I just don't have setups. And from a higher time frame point of view, I feel like the easy mean reversion trade has played out in many cases. So I just simply, I wait, basically. And this is the thing about crypto. I made that cringe influencer post, what feels like months ago, where I was like, crypto goes up way more than you think it will, goes down way further than you think it will, also ranges for much longer, etc., etc. And this is, that's not changing. And that's a kind of theme we discussed between ourselves as well, that a lot of the stuff, like the rules of the game, are very much still, from the available evidence, they're not too different from what they were, right? Even though we have like a pretty different market in terms of institutional investor, etc., etc., some of the baseline stuff is still remains intact, right? Like, it'll dump super fucking hard into levels that you're not expecting. Like, correlations will be just that. They'll be correlated, and almost nothing is immune from Bitcoin and or Ethereum taking a shit. Other stuff, like if Bitcoin is stuck and shitcoins are flying, that's not a mid-cycle thing, right? It tends to be towards the end of the risk curve when you see that type of behavior. So this is something I think we spoke about either last week or I did on Monday or whatever, but in some ways it's been oddly reassuring seeing this play out, because there's not that much paradigm shift, new stuff to get used to for the time being, despite how different market structure is. It's kind of whatever squat, bench press, deadlift type of stuff. They can get new machines, new exercises, discoveries in exercise science, but some of the old traditional stuff still works, and people should take some comfort in that.
Yeah, and who knows, right? Maybe this is just like legitimately just the first dip of the rally, and it's just going to continue higher. And I mean, I'm down to entertain that thought once we actually make some bullish price action, right? Sure. Like, this might sound like doomer talk, but there's always an invalidation involved, right? Because I mean,
I got your screen, yeah.
If you think about it, this legitimately is the first pullback of this rally, which makes it, this is so weird. Like, this is the weirdest rally ever, where you just straight up go up only and then literally have a bubble pop in like 2 weeks. Because I mean, anyone that says this is just a normal correction is tripping in my mind. Like 50% pullback, it's not even, that's not normal for anything, and it's not normal for crypto, right? I mean, Bitcoin's done 40% pullbacks during bull markets. This kind of 50, 55 almost kind of retracement stuff, that's news, or at least mostly. We've had it when the market was tiny, but I mean, that's just, you can't really compare it, I think. So this is new, and maybe we just need that to reset, right? So like, it's not like there's 100% chance, and that's like what irks me too, is that people are either in the camp of, okay, this is 100% just a dip, and then other people are on the other side of that and are like, okay, this is 100% the end of the bull run, right? And I would say none of that is true, right? It's always going to be, I mean, I think we probably put in the cycle top, but I'm never going to say that's 100% the case, because I just don't know. Like, I'd be completely pulling that out of my ass. And this can turn back around bullish. And in my opinion, how it would turn back around bullish is if we based here for like a couple months, maybe even the same length that we've had up here, right? We kind of consolidated in here for 84 days. Maybe it's going to pull back like this, go sideways for 80 days till people are completely tired of this shit. And then maybe it dips and completely rallies right up, right? I mean, I could see that. I'd be very surprised if we just legitimately distributed for 3 months, dropped by more than 50%, and then just rally back up. I think that seems highly unrealistic, but I mean, it's crypto, who knows, right? But if we did something like that, right, went sideways in this area for a couple of months until everyone's bored, I mean, why not, right? And or if we are in this kind of weird cycle where it just keeps on going up, if we start trading back above 50K, I'm going to be convinced as well that we're going to head higher. Yeah. Anything but those two, and I'm going to suspect that we're going to be heading for lower supports, and I'm going to be looking for buys at lower supports.
Yeah, I think that plays a big part in it. People like want, and this includes me, right? But people want like an immediate resolution and like an obvious answer to their existential questions. Like, is the bull market over? Is it just starting? Is this the first dip? And we all want answers to this immediately, but as you mentioned, it can take like fucking weeks for that to be clear. And even if it, you know, even in that context, that doesn't guarantee an actionable setup necessarily. Sometimes you just have to fucking wait, man. And you know, if this were anything else, I think we're all super biased because we spend all day looking at charts. We have like our net worth parked in crypto, or like money we definitely wouldn't be comfortable losing. But from like a purely technical perspective, if I was just to say, you know, you had range high, you had range low, right? Market trade within it, broke out, did whatever, and then came back into it, closed within, bounced. Like, you know, if I were to chart this out on any other time frame, any asset, whatever, you would totally reasonably say, well, what kind of environment are we in? Well, we're ranging. Okay, well, what do you do in a range? You're generally a seller towards resistance, and you're a buyer towards support. And then if you get a break of those conditions, which actually finds acceptance, then you look for the next level above the range high, or the next level below the range low. Like, everyone knows this, right? But because of our attachment and our experience and whatever, everything to do with how much time we spend looking at this, we sort of abandon you know, numbers that we don't think are plausible. We associate kind of net worth milestones with it, whatever you want. But all of those things basically cloud what's otherwise a pretty basic understanding of where are we, at least in terms of market structure and technicals. Like, when someone gives you a range to work with, and points out, let's say, that pattern where the range higher fails to act the support and the market's basically back to where it was, you don't tend to ask the question, well, does that mean the bull run's over? Or like, oh, does that mean we're going to retrace 90%? Is it the start of a bear market? It's like, well, it doesn't really fucking matter, right? Because even if you express those opinions, the way you trade this thing doesn't change. At least for me. So I think a lot of the way you can navigate around the discomfort, uncertainty, and all that type of stuff is just by treating it for what it is, which is price has come back, you know, sure, in quite uncomfortable fashion or whatever, but ultimately it's made its way back to the only meaningful high time frame support we bothered to build in whatever 2021, and you know how to trade it and come to conclusions based on that, or based from that accordingly. Like, I don't know, it's like the number one thing, even when I join these spaces rooms and have a chat there, the number one question is like, oh, does this mean the ball runs over the, you know, whatever? It's just not a question that my system is very well equipped to answer. And I don't think a lot of the time it matters. You know, if the range low breaks, yeah, we're probably fucked for a bit. If we break out of resistance through 40k, then we have a couple of retest levels, and if those go, then we make new highs. It's not hugely complicated, you know? Like, I know it's easier said than done, of course, but like, from a zoomed out, what does this mean, where are we type of thing, my whole point is, you don't need to be able to answer those heavy existential questions about the next 2, 3, 6 months. You can kind of just take it for what it's worth, one level at a time, and build your conclusions gradually, as opposed to immediately, you know?
Yeah, I like that. It's just a question of, and this is something that I've realized in the last few weeks, is that a lot of the new people that come around are obviously not traders, and it's really hard for them to kind of put that to work. Because, I mean, as an investor, if you're like, okay, this is the top, you just don't want to be buying, right? Like, if you're saying, okay, top's in, that's actionable advice for like these new people.
Sure.
It's not how these things work. Because if anyone could tell you 100% of the time whether the top's in or not, I mean, they wouldn't do it. They would just be rich off of like own probably an entire country. Because I mean, that's how, like, that kind of information, how valuable that is, right? There's never going to be anyone that's going to be 100% right about these things. Yeah, for me, it's just, I can say this looks rough or this doesn't. I mean, this looks beyond rough. I would actually like to see it move into 38k towards the end of the week. If that's not happening, I mean, Jesus Christ, look at this. And this is me making the chart like pretty. Like, look at this, and I'll look at this.
You, for fuck's sake, man, we talked
like,
about
look at this. What is this? Do you really want to be like the guy that's just betting the house on it? I mean, maybe, but I have troubles with this, and so I'm just gonna be chilling. And if I'm wrong, like if this looks rough and I'm not entirely sure if we're going to keep going up for the next few weeks, is wrong, I mean, I'm going to be buying like a pleb in the 50k range.
Sure.
And I'm completely fine with that, because we talked about like taking some off when it starts looking rough. And I mean, that's what happened in the 60Ks when we had the Coinbase listing, and that looked like that completely flopped. And I mean, if you didn't take profit then because you're like, okay, I'm fine with sitting through drawdowns, and then you reconsider down here, that's like the problem that I'm trying to point out, right? Because, I mean, either be early with this stuff or don't do it at all.
Panic
right?
early or not at all, right?
Yeah.
And that's the thing. If you didn't rebalance in any way, like the point you're getting at is spot on, because then you're forced to make decisions at like the most uncomfortable points. You know, in terms of how much am I willing to give back and all that sort of stuff. Like, even if you pay yourself a little bit, you can still approach these massive moves down from a position of strength. And, you know, you can do it with a clear head. Whereas if you're now considering, like, oh my god, I took no profit on the way up. Yes, we're at support, but if it breaks, I kind of give back everything I've made in the bull market. You're not in a position to make, like, reasonable determinations based on what just the chart evidence, whatever data is telling you. So it's really, really tough. Like, the whole mental capital side of it is super understated, in my opinion. Which is why I always say, like, even if you're fully into crypto, whatever, like, having some fiat that you just have ready for, like, not just a rainy day, but, like, your kind of yeet fund, right? Like, the markets literally looks like it's about to vanish, and there's a huge asymmetry of doing business at this level. I really think that, even just from a mental capital point of view, it's really good to have that reserve or fallback for when you think, you know, when it's needed most or expected least. You looking at Coinbase?
Yeah. Oh, geez, that actually worked out really well. These levels did. But yeah, I had Coinbase open just because I hadn't looked at it in a while. I was wondering how it was doing, and I mean, unsurprisingly shitty.
Yeah.
Yeah, I mean, I think that's been kind of like when you have these, like, there's been two things that have kind of been putting people off of, like, at least the bigger people off of crypto for at least the last few weeks. One, Coinbase doing like so poorly. And then two, the GBTC stuff, which is, I mean, That's just been insane. Like it's just been trading way below Bitcoin. And I mean, I haven't actually checked in the last few days, but I mean, it's gotten a little bit better, but it still looks completely out of whack. And those are like, when you have these kind of things, those are warning signs, right? And someone that spotted this really early and really well was Loomdart. Shout out to the boy. He was very, very early with, okay, this GPT stuff is widely bearish for Bitcoin. And I tend to agree. When you have GBTC trading below Bitcoin, I mean, that's asking for trouble, right? People are going to see that and going to be like, okay, this is scary to get into. And that's been dragging the market down a little bit. But then again, like on top of that, we've had all the Elon stuff. And you can't forget, and this is something that people always forget, that we had this run. We had a 1.7K% run. And I mean, even if this goes down into like a crazy bear market like we've seen in the past, which would be like 80%, we'd still be up from the bottom.
I really don't like when you have screen share. It just makes things pretty unpleasant. Have you ever just reconsidered? By the way, the chat quite reasonably is pointing out that Loomdart is bullish now.
Yeah. And I mean, he could be right. I mean, there's a bunch of people that are bullish. Like, I mean, I've talked with a bunch of funds in the last few days, and you've given me some info, and a lot of them are bullish, right? And a lot of them are buying. It's funny because I hear that and I know that they're buying, but I mean, the chart looks complete crap. Like, who the fuck's selling if they're all buying, right? And how long can they sustainably buy if this is how the chart looks while they're buying? But yeah, there's a bunch of smart people that are buying now. And I could be the idiot that's not buying the bottom because I'm fearful after like a 50% drop. Then again, like I've been buying 32K consistently, but still, right? I could be bearish at the bottom basically here. And I'm completely fine with that because if it goes back up, I'm just going to buy into the rally.
Yeah, I love the Beartard vibes that sometimes come out from the stream. And then if you look at like both our positioning and public record, whatever, we're just like buying these nukes. and I think being able to do that is really important, and being able to separate, at least when it makes sense to do so, your gut feeling versus what the actual trade calls for. So a lot of the time, when markets look really shit at levels that matter, those end up being good buys, at least for some sort of bounce. And the same applies for selling resistance. Like, it literally looks like it's about to turbo teleport higher, but like it's at a level where it makes sense to de-risk. That sometimes makes for really good entries. Like, you'll see this a lot on like crypto Twitter, for example. You'll see, like, I'm not going to name names because I'm not into starting that. Certainly not like an hour, 10 minutes into the stream. But you'll see, like, for example, like a level of resistance, right? And then the market's coming into it, and it's like barely poking above it. Like, it's pretty much like this could be the wick. And if anything, it makes sense to bet on this being the wick. Like, the market's literally flying into resistance and is poking its head above it. Now, normally you sell this type of stuff, right? But the way it'll be phrased on crypto Twitter is something like, oh my god, if this level gets broken, this is going to be so bullish. We're almost there. And what they don't realize all of the time is you're actually shilling a short. Right? Like, if there's anywhere to sell this thing, it's actually where you're the most excited and making that argument right now. And the same works for support, right? You have like a level, and then the market comes into it and like starts to poke below it, and it's like, oh my god, if this level is lost, we're literally going to zero. It's like, well, yeah, you're technically shilling me a buy here. Because if you're going to buy anywhere on the chart, surely it has to be at these mega inflection points, do or die, whatever. So, you know, the phraseology matters a lot, and it's almost like the fucking opposite of what they're trying to convey. Like, oh, if this gets reclaimed, it's going to be so bullish. It's like, okay, so you're saying the chart is bearish, right? Because it's below that key level that you pointed out. Like, you see this shit a lot, and it's just worth kind of taking half a second to consider what is the implication of what they're actually saying. Like, oh, if X gets reclaimed, it's Y. It's like, okay, but X hasn't been reclaimed, so I guess it's not Y, right? Or like the opposite. You see that kind of stuff a lot.
Yeah, it's cope on the highest level. Like,
no, it's not Kaleo for those asking.
I'm always impressed when I see it, because it's like, I mean, I get where it's coming from, and this is the same, like, every time you're gonna see people talk about their trades, it's gonna be the loudest when they're in wide profit, right?
Right.
So I mean, people are gonna, like, there's people that shorted this, right? and they're gonna mention it once, if at all, and then they're gonna like be very, very loud about it in this week, right? It's just how this.
It's the good old P&L posting wisdom, right? If you're posting your entry to Discord or Twitter, you should probably like take some profit or something.
Yeah, and it's because like you made a bunch of money, right? And like most people in those kind of circumstances, right? Whenever they get the loudest, it's the furthest away from mean reversion, and you get the mean reversion, and then they look like idiots, right? And it's always the same thing. And I mean, it's not something that you can really prevent when you're talking about trades, because obviously, even more so when you're talking about high time frame trades, right?
Right.
Like, let's say you're bearish in here, and you're like, this is 3 months of distribution, and then you're gonna update that obviously while it's nuking. Doesn't make much sense to update it 5 times during that sideways. And then once it's nuked, you're gonna update it, and then that might be the bottom for like a few days or a few weeks. But yeah, I love how you said it, because technically speaking, for a lot of tweets that you see, it really is the exact counter argument.
Yeah,
and it's not really like, they're not trying to do that, right? No, that's the funniest thing about it, because that is kind of like everyone's coping at those kind of levels, and then they're like, okay, just hoping for that to happen. But it's like, hope is the enemy of the trader, right? If you're starting to just dig on hope, I mean, then you're truly lost, right?
I wonder where Trader Main posted his Rune P&L thing. I think it mooned, and it's basically retraced where it came from, like retraced his tweet at this stage.
I think he did it at resistance, and it broke above the resistance.
Yeah. I think he did it here. So this will happen. I mean, Chad caught like the bottom of it with good size, and then he P&L posted like here. And I'm like, bro, this is this is not where you P&L post. And then this move happened. It broke out, so I'm sure was happy with that. And now it's kind of back to where it was. And Rune is like actually a really decent example of the thing we were talking about with positioning for altcoins following the big nuke. So like, if you were to show me this chart and to say, where would you buy this? Right? I mean, the answer is either it's support. I mean, God knows, probably have to look at lower time frames. There's some stuff here, but whatever. Like, it's either on a deeper dip following this market structure break, or it's on some sort of reclaim of resistance. At least, let's say this lower cluster to the top one, and then maybe higher, whatever. But like, in terms of where the market is right now, you're essentially buying like 100% rally into resistance after a weekly bearish break in market structure, and like that's just a bad trade. You know, from like a decision-making point of view, it's just a bad trade.
It's hilarious that you can say that, right, in crypto. It's up 100% into a bearish low. It's like, what the fuck? When do you get that?
It's outrageous, isn't it? It's down like 150% bearish retest. That's the thing. It's insanity.
That's completely mental. But I mean, that's how crypto moves. And that's something that you have to be fine with if you're trading these things, because, I mean, you're going to see that more often than not. Like, there's gonna be these like massive candles to the up and downside. It's just how it is. Yeah. And the more kind of crazy the candles to the upside get, the more crazy the candles to the downside get after. It's just how it is. And I think it's mainly because it's always gonna be like, there's always gonna be these people that are chasing these things into the crazy up candles, and they're obviously not gonna be happy with what they have when their coin's dumping 50%. And then you have a bunch of sellers that bought basically into nothing, and they're going to sell into nothing as well.
Sounds like a great trading strategy. If there are any questions in the chat, by the way, we have some time to answer those, but we've covered most of the stuff I think we set out to cover. Yeah, let us know if anything comes to mind. Thoughts on staking USDT for interest versus holding USD on exchanges, please? Depends where you stake. A lot of centralized exchanges have offered lending, like on FTX, etc. Like, I'm personally pretty comfortable with that. But again, you have to bear in mind, there's this idea, also like the video if you've learned anything so far, that'd be really cool. Anyway, there's this idea that like you don't need to rotate out of crypto because there's all these attractive lending opportunities that can just keep you deployed in the market. Now, of course, those favorable rates are products of speculation, right? Like, people want to borrow to get long. If those people are dead or they have no money, then accordingly the demand to be long is going to be lower as well, and that'll be reflected in how much interest you get for lending out your USD. So super high lending rates were normalized when the market was super bullish because everyone wanted to be long everything. But if speculators are wrecked / dead, then it kind of becomes masternodes 2.0, right? Where it's like, oh, well, I'll just have passive income from my crypto because everyone wants it. It's like, yes, but if no one wants it, then your rates are going to be fucking flawed. So it's worth bearing in mind. Obviously, there are like different parts of the risk curve which accommodate this differently. Like someone mentioned Alchemix and some DeFi vault, like Yearn vaults, etc. Yes, for sure. But generally, that relationship still remains intact. If you want good rates, it's either way more risk or you need speculators not to be dead. You know.
Yeah.
Let me know if you see something in the chat as well that I missed, Duck.
No, I think we've covered most. And a bunch of people are asking for the altcoins, but I mean, that's going to have to wait for Monday. I mean, I think you're going to cover some.
Yeah, I'll do some altcoins on Monday. Oleg says, do you guys have long-term... Oh, fucking hell, stop spamming, долбоёб, успокойся. Один раз написал, достаточно, пиздец. I think we answered that question in the beginning. I personally don't do the super cold storage nuclear bunker crypto. I'm happy to kind of trade around even my spot holdings or whatever. What about you?
I mean, I used to have it, and then I nuked all of them, nice. Basically at 60K. I mean, I just didn't. And the reason why, to be quite honest, is because I sold like a bunch earlier, and I didn't have that much to sell left. So I was just like, I mean, this is either the greatest short, or I'm gonna have to sell something. Like, and I didn't want to short because it's like pretty big headache right now. So I was just like, okay, I have enough that I can sell that would cover a short, so I'm just gonna do it. And that was basically like my entire crypto exposure gone, and pretty happy with that.
Hard.
Yeah, I mean, maybe that's gonna like impact my view on things, because I've not had that basically since I've entered crypto. Always had a little bit. Now, like, I have a bunch to trade with still, but it's marginal. Like, it's not really that big of a stack. So I mean, maybe that influences my judgment. I don't know. Maybe I'm super biasless because of it, because I have no exposure. I have no idea. We're gonna have to wait and find out, right? And I'm gonna reestablish that at some point. I just don't know when. And I'm more than happy to reestablish it in the 50-55 range, and then just take the difference, that tiny difference, as a gain, buy a little bit more, and call it a day. And if it dips lower and it crashes, and I see like people call for zero again, because I've had an awful lack of that this time around. Like, usually when you crash in crypto, you get like these zero calls and everyone's panicking. This time around, not so much. If you get that again, I mean, I'm just gonna basically double my long-term position by just buying back with the same dollar amount that I sold at the highs.
Makes a lot of sense to me. Also, just final, Eric says, any thoughts on one-time short versus selling spot? If you're talking about inverse futures, then hedging with a 1x short, like, the difference is you'll be getting paid in Bitcoin when that settles, and also you have convexity working in your favor, right? So as the price moves in your favor, your kind of notional position size denominated in Bitcoin is greater as well, because like your 50,000 USD can buy more Bitcoin if the price of Bitcoin itself decreases, right? So if you're 1x hedged on inverse futures, you get paid out in Bitcoin, which some people really like, and the reason it's often called a perfect hedge is because you benefit from that convexity as well, and also just the funding rate a lot of the time also works in your favor. Whereas it's just selling spot, I mean, yeah, you don't have to incur any counterparty risk for the most part. You don't have that liquidation risk. I mean, not liquidation risk, but like if you don't know how to use futures, like I've seen a lot of attempted 1x shorts which were anything but that, right? And it also gives you freedom in terms of how you want to deploy that USD when you think it's the right time. It doesn't have to be in Bitcoin. It can be in whatever altcoins or Ethereum, whatever that you want. So that's also different, but obviously you don't get the upside of having that convexity work in your favor. Your P&L is pretty much linear with the price, or there's no P&L because you're just in USD. Did I miss any big points there in terms of do you hedge with 1x short or just move into USD? For me personally, I just sell into USD. I'm not saying that's the best thing. It's just, I don't know. Psychologically, I find it easier.
That's exactly the point I was about to make. I think it's best if you hedge, like theoretically, best, but it's so much easier to kind of look at that, kind of check up on your position. You're like, oh shit, this has grown so much, I'm just gonna close it. Like this, like, I mean, I've been trading for years and years, and I still get that urge. I'm looking at this, and I'm like, holy shit, I've been holding this down for like 50%, because I mean, at some point, this was basically literally like a 50% down move, right?
Right.
And then I look at this thing, and I'm like, okay, I'm just gonna close it because I'm happy with where it's at now, and then it keeps on dumping, or my trade never really was finished. It's like it's harder on you, but if you can control yourself, I mean, it's probably the best way to go about it. But it's gonna take away, like, it's gonna you're always gonna have the feeling that you have a position open, and I like to be able to just say, okay, I can walk away and don't look. Like, I could walk away today, come back like in 3 weeks, and if it's at 55K, I could buy back. But I couldn't do that if I was in like a 1x short, even though it's basically the same thing, because I'd be freaking out.
Yeah, very good point. There's that answer. I think that's plenty to chew over for the weekend. Any final notes, wisdom, expectations, Duck? Or are we gonna have to wait until Tuesday and Wednesday to hear your bearish propaganda with log turned off and everything?
No. I think I've said enough. I mean, I hate to be called the bad part, because we're at high time frame support, and I've been more buying than selling.
Yes.
If you think about it, it's just like, I like to warn about these things when I think that there's a possibility that they're gonna come to fruition. I mean, I still think there's a good chance that if you're buying altcoins right now, you're gonna be down 50, 60, 70, 80, 90% from here. Could be wrong, could not be, but I mean, there are warning signs, and I like to talk about them while I see them. And I mean, that can change real quickly too, right? It's just a few levels away from being bullish again.
Yes.
But I need to see that before.
Good points.
Before I get excited.
Agreed. I don't have anything to add. Thanks for hanging out with us. And be sure to like the video if you haven't already. That kind of stuff helps. Thank you to Blockfolio for sponsoring Technical Roundup. If you want more content, you've got me on Monday, the newsletter on Tuesday, Duck on Wednesday, and then we do it all over again. On the content side of things, we're bringing back, resurrecting the Technical Roundup podcast. Hopefully, we're going to have Avi Fellman come back to speak with us about the market after he called basically the top weeks in advance, how it would look like, etc., etc. So keen to get his updated views. And then also Max Bornen is coming back to talk about GBTC and give us another demystifying course as to what it all means. Is there still spot selling pressure, ETF, all that fun stuff. So some definitely, some topical stuff to look forward to. Have a safe trading weekend. I think it's a long holiday in the US, like bank holiday on Monday or whatever. So not sure what to expect from that. I'm sure we'll see. I'm gonna go D rank, and Duck, I'll chat to you in a bit.
Yep. Bye bye.
Take care. Bye bye.